Hey guys, Mike here. So, boy, what a day on Friday. And if you watched my Thursday's night's video, you kind of saw where they leave us, right? Sitting at 0.79 fib on SPY and QQQ, major resistance level on IWM, and whew, pulled that rug right out from under us in pre-market and kept it going, especially at open. I apologize, it's getting ready to rain in here. But I got to get this recorded now as I'll be gone for the weekend to go do Christmas with my wife's family. So let's go ahead and we'll get into it. You got great questions about the Fed, about Apple, and how in the world that thing continues to push up like it does. I will show you exactly how it does that and why it continues to do that right there, as well as some options questions and a few others. So we'll get right into it. Feel free to participate and feel free to ask other questions as well. So first one here says, Mike, what do you think of quantitative tightening in terms of where the Fed's is in the process? And what you need to do is take the word tightening out of your word. They are not tightening anymore. They are cutting rates. We just did our third rate cut. We'll have multiple more coming up this year as well. They are still rolling off the balance sheet. You know, they cut that in half. But what are all the central banks doing around the world? They are doing more easing. They are cutting the rates. What is doing the tightening now is the bond market, right? Just like I told you. 10-year continues to go up and stay where it's at. What's happening to mortgage rates? This just came out yesterday. Mortgage rates rise again, finishing the year at 6.85%, just about where they started, even though the Fed has cut 3 times. Because remember, the Fed funds rate, you're getting those emails about your savings accounts. They're cutting those rates, the savings rates, but the 10-year's been going up, and so has other things. Okay, it takes more money now. You got to spend more money on the interest payments if you want to take a loan out or get a house or whatever it is. Okay, that puts strain on the economy normally because now you're spending more on interest payments than you are out there buying a car, a house, vacation, all clothes, all that fun stuff. Okay, and so yes, that's where they're at in the process. And here's the thing: remember, it's a process. Okay, the bond market's saying they got it wrong, is what it's saying, as I showed you, I think it was in Thursday or Wednesday night's video. But when you look, obviously if things get bad, what are they really going to do? They're really going to start easing. They'll stop rolling off the balance sheet, and then of course they'll cut rates even faster if they need to. Okay, so that's where we're at in the process as far as I'm concerned. Feel free to put your opinion down in the bottom. Now this is a long one and a good one here. Says, hey Mike, Merry Christmas. Had a question for Saturday. When it comes to stocks and indexes, am I correct in saying that the movement in the underlying stock prices primarily push indexes, but as people buy indexes that comprise these stocks, that's also a factor to stock prices, but to a lesser extent? Think about how much buying of index funds actually affects the stock prices. And the second part is, I think about all our 401ks buying every week depending on pay schedules. Do retail investors even have much of an impact on overall stock price swings? Or are we basically along for the ride, thinking about what is the percentage of institutional and hedge fund versus retail in the market? I mean, retail has definitely picked up over the years for sure. We know that, especially in the trading part of it. So we do affect stock prices. Just look at Tesla and some others, Nvidia and everything. But here's what's great about this. This was written October 1st, 2024, or published, that is. And it's titled The Dominance of Passive Investing and Its Effect on Financial Markets. According to Statista, passively managed index funds accounted for 19% of total assets investment companies managed in the United States in 2010. As of 2023, the number has skyrocketed to 48%. It's almost half. And when you look over here, I'm going to put some highlights in this thing for you. Increased flow into passive funds results in overvaluation. Does this sound familiar? Which will lead us into our next question about Apple. The reason for this has much to do with the strategies behind passive investing. A passive investment strategy usually tracks a valuated index, which involves putting more money into large cap stocks. Max 7. As a result, the economy's largest firms receive more flow, thereby increasing its price. If a large firm is overvalued, the flow from the passive funds would exacerbate the overvaluation. Now, let's look at an example of this. Apple. Woo! Here is some of the top ETFs or even funds out there. Where is Apple? Still number one. I'll show you why that's kind of a joke in a way when you really think about it, and it's not a fundamental thing they're doing this for. Vanguard, of course, has the most populars. I mean, there's VTI, you saw VU, Apple, number one. Here's BlackRock's number one ETF. What's number one? Apple. You go over here and look at this fund right here, which is the SPY, of course. Very popular. What's number one? Apple, right? Nvidia's up there at number 2. Microsoft, number 3. So this was talking about these overvaluations, if you want to call it that, if they get that way, because of this. And here's the crazy thing when we talk about 401ks. According to the recent data, around 8.9 trillion is currently held in 401ks. If you look at the bottom right there, right mid to bottom, annual contributions for 401ks can often exceed $300 billion. That's quite a bit of cheddar, okay? And so I went and looked and I said, okay, what's the #1 mutual fund? That's what's in a lot of 401ks out there. And it's this one right here, VTSAX. What's #1? And Apple, right? 5.8% of the flow. So it's like #1 in all of these. And so all these 401k funds are flowing in. It's buying Apple stock. All these 401k, or I'm sorry, not the 401ks, the IRA funds we put in that go into the market, all the money flowing into the passive ETFs and stuff are pushing these stocks up. So yes, retail definitely has an effect. You see this on the trading market for sure. I mean, we were way more into it buying individual stocks than we used to be by far. I mean, within the last 5 to 10 years, it's probably doubled, for crying out loud. I mean, that's just a guess, but I would think that's the truth. And so, and then of course, you got, what is it, 7,000, 7,500 you can put in your IRA, your Roth IRA, and all that stuff. And so that money's going to go in the market. A lot of people just buy the SPY, the QQQ, VTI, VOO, these kind of things. That flows into really the big boys. Okay, that's what happens. And so, do we have an effect? Yeah, of course, they're using our money. That's what I'm saying. BlackRock and Vanguard, they're using our money for them to make money, right? They're making money off of us because we're putting our money in there. They're charging us off for all these fees. But yes, that's helping push the stock market up. That's just the way it is. Okay, and so and then your 401ks coming in later on. And so, yeah, and 401ks aren't as big as they used to be because what the companies stop doing? They used to match 6-7% back in the day. You're lucky to get a match now, right? So they actually decreased the amount of money going in with 401ks, but still there's a lot of money out there. You also have the teachers' pension funds, all these pension funds, right? And they're usually pretty conservative. And so they're going to go into what? The safe havens, Apple, Microsoft, all that fun stuff. But hopefully that answers your question, but that does lead me into this next question, which we just talked about. Explain on Saturday why Apple is way up, but looking at the financials, it's getting weaker. It seems like they're way, way overdue for a correction. I mean, look, we know Apple. I don't even know why it's #1. I've been saying that for 2 or 3 years now. I don't know why Microsoft hadn't skipped it, to be honest with you. Because when you look at this thing, I mean, the PE is just going through the roof. There's days the market's red, Apple's green now. And you can see the PE at the bottom, 42.6. There's a reason why Buffett, who's a value investor, dumped half of it. There's a reason for that. It just got too far out, and they were like, okay, we'll wait for a pullback and we'll buy back in. I'll guarantee you buys back in, right, if it comes back. But when you look at it, what I'm saying is you're looking at this on growth or any other metric, look at the growth. I mean, right there, 2% decrease in the previous year in 2024. 2023 decreased 2.8%. 2022, 7.8%. And so, but you saw in the fourth quarter of 2024, it's 6% increase. So 6%. You compare that to Microsoft, it said they're increasing anywhere from like 7 to 16%. Right? And then you saw what happened to the Vision Pro. It was a disaster. Remember when I showed you that video of them saying it's $34.99, and even the Apple hardcore people were like, what? And they didn't buy it. So they had to cut the demand on that thing. And so, and also their iPhone sales, these lifespans of this iPhone, people are keeping them longer because they're so freaking expensive. And it's basically the same iPhone with just a better camera. My wife used to get the new one all the time. She stopped that. I said, it's just the same phone. She said, yeah, you're right. And so, when it dies, she goes and gets her a new one. That's just the way it is. Same thing with our computers. It's the same thing. So, I don't know, man. I mean, they got to start getting more innovative. Suppose they're an AI play. Suppose they'll come out with stuff. It's supposed to be an Apple car. I think that got scrapped too. And so, compared to the other stocks who have just a ton of growth going for them, and you look at Apple and you're like, ugh. I even think I might have been mistaken on the source I looked at, but I even thought Apple had more cash than Microsoft. And when I looked at it, it was like Microsoft actually has more cash than them too. They both have tons of cash. But yeah, it's just one of those things. I'm sure in the past we've had a stock like that where finally they said, you know what, I think we get more bang for our buck in this stock, and it got skipped over. And when that day happens, that's when you'll see Apple finally start to fall. That's when it'll happen. When they go, okay, it's not #1 anymore. Let's put something else up there. That's what you're looking at, but we'll see. But good question. And next here comes from Dr. Marcus, and he says, when looking at option contracts, can you explain exactly what the difference is between the volume and open interest and why they are important? Thanks for everything. And when you look over here, you can see clear. I got these boxes right here. So volume, for example, just represents the total number of options contracts that were bought or sold now during that specific trading session or the trading activity is what you're looking at. The open interest, though, is the total number of outstanding options contracts that are currently held by traders and haven't been closed yet. And so the importance is you don't want to pick a dead contract. If you start picking contracts where there's nobody in it, there's no volume, usually what happens, depending on which, obviously, stock you're talking about here or which index you're trying to buy into, you're going to get spreads that you don't want to get into, which means it may go from, like, say it's going 15 to 30 cent a contract. You're either paying 15 or 20. And if that spread stays that way, even though it goes up, when you go to sell it, You're going to think you're up so big until you go to sell it, and the spread to sell it's going to be really big, and you're going to be on the bottom end trying to sell it. Hope that makes sense. But so yeah, you don't want to be in some dead contracts. That's why a lot of people look out there for big money, and they'll look to see like, you know, what is big money? Where's these? Like I've showed you the Tesla call sweeps, right? Just millions flowing into these certain contracts. That's the ones you want to look at, not the one that has no volume. It's just dead as a doornail. So hopefully that helps out for you. Now, next one here says, thanks, Mike, for all the educational content you push out regularly. It's been very helpful. I have one additional request. Can you please talk more about Fibonacci levels and how to make sense of it, please? Let's see, a lot of people want Fibs. I've done like a detailed members video on this. I've talked about it a lot, so I'm not going to talk about it too much, but I'll just put it this way. In the basics, you have to play around with Fibs. You just have to play around with them. What you're looking at is the peg from a high to a low, or a low to a high, right? So if we're selling down, I'm going to bring the fib levels over. And these are just simply, I'm going to try to keep this as simple as possible. It's a mathematics thing. Don't try to overcomplicate it. But when you look at these levels right here, especially what I'm looking at here is 0.5 to 0.79 is the ones I'm really looking at. And when you look at it, normally what happens, you'll get on the 0.5, golden pocket, which is 0.618 to 0.65, and then 0.79. It means you're in a discount if you're coming down, okay? And when you're in a discount, that's when most people start to buy. That's when algos start to kick in as well, because they're buying at a discount. They're getting it cheaper, way cheaper than what it was. And if you watch Thursday's video, you notice I showed you where's the Qs and SPY at, where they both stall, 0.79, right? So if we're moving up, which this is QQQ right here, is what I showed you Thursday night, and I'm drawing from a low to a high. Pick any low to high you want. Play around with it, okay? Both of them hit 0.79, and then what happened Friday? Boom. We sold down because now you're in what they call a premium. If you're going up, and once you get above 0.5, golden pocket, 0.7, all that good stuff, they'll say, oh, we're in a premium now, so I'm just going to, and you'll see pullbacks. I mean, it's a crash. I mean, nothing like that. It just means you'll see some kind of selling. A lot of times they'll just go down the golden pocket, come back up, and then break it and keep going, okay? So that's what people are looking at. You also see me, like, once you get above 1, you're in like 1.2 and all that, 1.5 and all that stuff. That's a huge premium up there. But that's how, if you're trading, that's how people are looking at it. If you're investing, if you notice when you get major pullbacks, let's say, you know, either 10%, 15, 20, whatever it is, I don't care if it's 5%. You pull from a high, where it's coming down from, and then to the previous low a lot of times, and you can see, you're getting a discount, boom, it turns. This is what you'll see a lot of times. Sometimes it's a huge discount. You get down that 1.272 and all that stuff, that's when you're in probably a major crash. But again, this is a small pullback right there, but I'll pull it from that right there. I bet you're on a discount though before we bounce, and we are. So once we start moving, look forward to getting to a discount. So, and a lot of people, they'll do is they'll dollar cost average in. As soon as they hit 0.5 and they don't think we're in a crash, and what you want to do is line this up with support and resistance as well, or trend line support. And you can see that one came into trend line support. This one did not, right? And this ain't a big pullback, but all of these are in discounts. You see that right there? Now 2022 is a major crash. And so when you start pulling this one, when it starts happening, what you got to look for is, you can pull it down, but within a crash, it's going to go right through all of them. But as soon as you see the 50 cross the 100 and you get that death cross, and especially once you cross 10%, like you know, like, oh boy, okay, this is a mess. Just pull it down to the previous crash and see what happens. One, you're going to be in a guaranteed discount. Two, you'll see it bounce off fibs right and left. And when you line them up, you play around these enough, you'll know what to do, because you'll start seeing them line up right here. Look at this. And what happened? Where did it bottom at? 0.618 from the previous crash, right? So that's a major discount we're in right there. So people will start dollar cost averaging at the 0.5. I see it in day trading all the time, the 0.5, especially the golden pocket, especially the 0.79 in day trading. And that's what actually, if you look at Friday, you pull a fib on, that's what happens. So hopefully that makes sense, but you got to play around with it, guys. You can't just watch this video and go, oh, I got it. Play around with it. I promise you'll understand it. I promise you will. And they are a huge tool. One of my members told me he started using it and he's happy as can be. So that's all I can say about that one. Now, last one here says, hey, Mike, question for this Saturday to wrap up the year. Do you write an annual review of your trading year? If so, what did you learn or take away from this year? Do you track your performance and compare it to the index benchmark? I really just compare it to the year before. I compare it to my performance. Like, did I get better over the year? But because, I mean, I can clearly look at it and say, did I outperform the index? And you're looking to do that, right? And the one thing I would say is, I'll tell you what I've learned is, one, to start using the ratios better as far as like SPY versus QQQ, SPY versus IWM, everything versus the SPY, right? To try to figure out where money's rotating into. And so that's something I've definitely done that's helped my performance. Also making sure you have multiple different accounts where one is strictly just, I mean, honestly, just buying the SPY, buying the QQQ, and all that good stuff. and then another one is more trading, and then maybe the other one's in Vanguard, ETFs or whatever and stuff like that. But yeah, I mean, I like that. I don't write a report on or anything. I'll go and look at it. I mean, I have a little spreadsheet I do, and I get to look and say, okay, I have my goals. More importantly, it's like, did I reach my goal? Right, here's my goal for the year for our family and how much money we've invested and been able to make and all that stuff. That's the number one thing I look at. Then, of course, I'll look over and see what the heck I did wrong, because there's going to be mistakes, and I learn more from the mistakes than I did the positives. And so, like, coming into this next year, 2025 could be rough, right? It might be good, it might be rough, but you're definitely looking at this thing going, man, stuff, it's got to be some kind of either recession coming or something's coming, right? Maybe just a sideways market or something, because it's kind of getting nuts. But when you look at all the econ data, that is. And so, I think understanding rotation, being able to track that like crazy is really going to help me this year for sure. Incorporating those tools I show everybody out, the Fibs, I would actually challenge, one thing I'm going to do this year is just start an account. Actually, I already have an account, so I'm going to use this to where I'm only going to buy like the SPY and the Qs and things of that nature, but I'm only going to make those purchases when we get like the momentum indicators on the weekly charts, doing like stochastic bullish cross, and when the RSI is at a certain level and the MACD, and each one of them are going to look different. But that's what I'm going to start doing that account, just to see how it performs, just to have fun with that versus other accounts. And so that's what I'm going to be doing, just a challenge to keep things fun or whatever. But yeah, it's a good idea. Definitely do it. But again, my number one thing is the goal I had set. Did we reach it or did we not? So, that's how it works. So let me know if you're doing that as well. Anyway, hope you guys got some out of it. I guess this is the last Saturday video before the new year. So I was like, wow, how about that? So again, I'll put Sunday's video together for us to start off next week. Next week is a shorter week because of New Year's, by the way. And so we'll see how that goes. But feel free to put any more questions in the bottom. If you have any, we'll put those in next Saturday video. And for 2025, wow, 2024 really flew by, didn't it? So anyway, have a good one, guys, and I'll see you later.